as a company with all the thought leaders who will be attending this conference and share ideas on the coffee culture and on sustainability, which is an important theme for my company. In 2022, Nestle procured about 10,000 tons of sustainable coffee from over 4,900 farmers in our country. This is a journey of commitment, of love, and we look forward to participating in the World Coffee Conference with all the energy and with all the support that we can.
A great coffee is a beautiful mood, aromatic notes singing out a rich legacy. The lush Tata coffee estates, adorning rich biodiverse ecosystems, fulfill a legacy of ecological balance and conservationism, where fragile habitats are nurtured with care, where alchemy and modern science harvest a rich, resplendent future. Tata Coffee, where each bean owes a debt to its joyous journey of a fulfilling cup.
Welcome delegates to the World Coffee Conference. As we gather here, representing every corner of the world's vibrant coffee landscape, we are reminded of the incredible journey that this beverage has taken us on. At Tata Coffee, we are committed to delivering exceptional coffee worldwide while pioneering practices that uplift our communities. Through innovation, education, and responsible farming, we aim to set new standards for excellence and sustainability. Together, we can forge a much more sustainable and inclusive coffee community, one that continues to captivate the hearts of coffee enthusiasts worldwide.
In 1956, the SLN Group began its journey by entering the coffee plantation industry in Coorg, Karnataka, the coffee cradle of India. It sowed the foundation for the SLN legacy by trading and exporting coffee through SLN Exports. In the year 2000, the company was scaled up through the establishment of a 20,000 metric ton curing facility and a coffee processing unit. Soon, SLN launched its instant coffee division and became a major supplier of both roast and ground and soluble coffee. SLN Coffee is committed to sustainability and ensures a low carbon footprint at every stage, right from sowing and harvesting to manufacturing. The year 2017 saw a refreshing new chapter unfold in SLN Coffee's journey. It created a splash in the instant coffee market by launching La Vista Coffee. Cafe La Vista was launched in 2022 to bring a truly international experience to Indian coffee lovers. The many facets of the SLN Group reflect in the global journey of its authentic coffee from bean to cup.
Nescafe has been in India for more than 60 years and shares a very special relationship of trust with the Indian consumers. The coffee journey today is even more exciting. Nescafe is proud to be associated with this journey of democratizing coffee in India, as well as in driving sustainable impact across the value chain that influences consumer delight, as well as ensures a socially and economically inclusive impact that it has on the community and planet. Our Nescafe plan is in its 11th year and reaches out to the coffee farmers and positively engages with them. We are proud of this journey, going beyond the cup to ensure the best for our consumers, the society, and the planet.
ನೆಸ್ಕೆಫೆ ಪ್ಲಾನಿಂದ ಉತ್ತಮವಾಗಿ ಮಣ್ಣು ಪರೀಕ್ಷೆ, ವೇಸ್ಟ್ ಮ್ಯಾನೇಜ್ಮೆಂಟ್, ಉತ್ತಮವಾಗಿ ವ್ಯವಸಾಯ ಪದ್ಧತಿ ಕಲ್ತಿದ್ದೇನೆ. ನೆಸ್ಲೆ ಮೆಡಿಕಲ್ ಕ್ಯಾಂಪಿನಿಂದ ನಮ್ಮ ಸುತ್ತಮುತ್ತ ಜನರಿಗೆ ಒಳ್ಳೆಯ ಅನುಕೂಲವಾಗಿದೆ. ನಾನು ಸಾಯಿಲ್ ಟೆಸ್ಟ್ ಮಾಡಿದಂದ ಗೊಬ್ಬರ ಕರೆಕ್ಟಾಗಿ ಹಾಕ್ತಾ ಇದ್ದೀನಿ. ಕಾಫಿಯಲ್ಲಿ ಈಲ್ಡು ಜಾಸ್ತಿ ಆಗ್ತಾ ಉಂಟು. ನೆಸ್ಕೆಫೆ ಉತ್ತಮ ವ್ಯವಸಾಯ ಪದ್ಧತಿಯಿಂದ ನನ್ನ ಕಾಫಿಯ ಕ್ವಾಲಿಟಿಯು ಇಂಪ್ರೂವ್ ಆಗಿದೆ. ನನಗೆ ಒಳ್ಳೆ ರೇಟು ಸಿಗುತ್ತೆ, ಒಳ್ಳೆ ಪ್ರೀಮಿಯಮು ಸಿಗುತ್ತೆ.
It is a matter of great honor that the World Coffee Conference is being held for the first time in India. And it is really a matter of great recognition for the country, for our coffee farmers, for the coffee community, and indeed for the nation that we are part of this great global event. As Nestle, we are the world's largest processors of coffee. I'm also delighted to be able to participate as a company with all the thought leaders who will be attending this conference and share ideas on the coffee culture and on sustainability, which is an important theme for my company. In 2022, Nestle procured about 10,000 tons of sustainable coffee from over 4,900 farmers in our country. This is a journey of commitment, of love, and we look forward to participating in the World Coffee Conference with all the energy and with all the support that we can.
Good afternoon, ladies and gentlemen. There's a slight delay, but nevertheless, we wanted more people to join in, and that's the reason we are starting about 5 minutes late. As you are all aware, this session is about the financing mechanisms and opportunities for the coffee sector, and it will explore vital topics, including a proposal for coffee facility fund addressing investment needs for sustainability and resilience, and so on for financing mechanisms. So it's my pleasure to request the panelists to kindly come over. First of all, I would call upon the chair, Dr. P.G. Chengappa, agricultural economist. Kindly come over, Dr. Chengappa, sir. I would also request Professor Rocco Macchiavello, Professor, London School of Economics, to kindly come over. Professor Rocco. I would also request Mr. Emanuele Santi, Development Finance Advisor and CEO, Development Finance Lab, to kindly come over. Ladies and gentlemen, after lunch, if you clap, the digestion will be faster. So please put your hands together. Mr. Emanuele Santi, Development Finance Advisor and CEO, Development Finance Lab. Mr. Andrea Illy, Chairman of Illy Cafe. Okay. Mr. Oscar Schaps, Division President, Stonex. Ms. Jennifer Faust, Founder and Managing Partner, Faust Global Partners, LLC USA. And of course, Dr. K.S. Mahesh, General Manager, NABARD, Bengaluru.
Pleased to meet you.
The session will also discover how private sector financing can help de-risk coffee investments and gain valuable insights into public policy and development finance structures.
Yes.
So without much ado, I would request all the panelists to kindly sit down. I would straight away request the chair of this session, Dr. P.G. Chengappa, to take us through the session.
So
over to you,
have
sir.
15 minutes each, more or less? Okay.
It's on, sir.
How do I activate this? What they will do when I need to speak. You guys are super.
Ladies and gentlemen, good afternoon to everyone. I'm well aware we had a good lunch thanks to the coffee board, but it's a challenge to keep the session, in an interesting manner after a great lunch. But I'm sure the kind of speakers and panelists we have, they will provide you all kind of knowledge to keep you, awake. Well, the focus of this session is on the much needed financing mechanism and opportunities for the coffee sector across the value chain. Coffee production, processing, marketing are capital intensive, so also labor intensive. As such, all actors or players in the value chain borrow money from both formal and informal capital markets. The increasing cost of inputs and borrowings, coupled with market volatility, has resulted in a cost push, resulting in reduced profit margins to all players in the value chain. Many small producers and entrepreneurs in the coffee value chain have moved away from their business, especially during the corona pandemic period. They're yet to really come back to the pre-pandemic level. The small producers in particular are not able to cope up with the market volatility, adoption of sustainable production practices in tune with the changing market demand. The climate change has further aggravated the problems of small growers, which eventually affects the sourcing by the roasters and the blenders. Similarly, other actors in the value chain require financial support to move up in the value chain. It's also applicable to producers who want to move up in the value chain to undertake other activities. And efforts are there in most part of the countries to develop global value chains. In the process, the regional value chains for coffee has to be elevated to the global level so as to make the whole chain efficient and sustainable. Overall, the coffee business has become much more risky venture with few alternatives for accessing the capital at a reasonable level or at a reasonable cost. In order to meet the challenges occurring due to the structural changes in the input, product, labor and capital markets, a novel proposal to establish a global coffee fund is being mooted. This global coffee fund is to benefit the small growers who have to make their coffee production sustainable, and they have to reap the benefits of the international market by being the active players in the global coffee value chain. This will help the small and the medium enterprises to be very efficient and also to earn a sufficient level of profit. This session will focus on the functional structure, governance, roadmap for a global coffee fund to be supported by the global multilateral agencies. In addition, other institutional arrangements to finance the business activities of the coffee sector is also being discussed. In this session, we have 4 eminent resource persons who are well known in the coffee value chain, and they will share their experience and knowledge to make the coffee finance much more supportive and accessible by all actors in the value chain. In addition, there will be a panel discussion in which 2 panelists will present their experience as well. The participants will also be provided with some time for discussion at the end if the time permits. Well, now it's my pleasure to call upon Professor Rocco Vashinova, Professor, London School of Economics, to make his presentation.
All right. Good afternoon, everyone. It's a huge pleasure and honor to be here. I've been to India several times before in my life. I've never come to Bangalore. It's a beautiful city, and I'm very happy to be here. So let me go straight into what we are supposed to be discussing today. We have started discussing a roadmap. Yes, thank you. Yes. Fantastic, thank you so much. For a new investment vehicle dedicated to coffee, blended with direct engagement of the largest private companies to mobilize further investment. This is sort of what is being discussed. We are at very, very early stages, so I'm not going to tell you how this fund should be set up because I do not know. What I'm going to discuss is 2 different things. First, I'm going to ask the question, why is it that we need such a vehicle, such investment vehicle, and do we really need it? And then I'm going to put on the table, I think, 1 small concrete step that I think will be helpful along the way. So let's start with the why. There's a sense that the demand for coffee is going to increase in the next 2 decades, ideally. On the other hand, there's very strong challenges on the supply side. We'll talk about those in a minute. And so, typically when demand increases and supply decreases, we expect prices to increase. Right now, maybe the nominal price, if you take a very long run view, has increased a little bit, but the real price maybe has not increased as much. So why is that? Why is that these 2 forces, there seems to be a contradiction here in the data. I think the contradiction comes from what I would label a vicious cycle under external pressure, although I have to say that I'm putting my own words on sort of a vision that was shared with us by Andrea Illy earlier this month. So I hope this is my understanding of the situation in the sector, and is very much inspired by Dr. Illy's communication with us. So what is this vicious cycle? So there is a trend towards concentration in supply in big origins. And what is driving this trend? What is driving this trend is this little figure at the bottom left corner of this slide. So what that figure shows is the distribution of yields within countries. So the more to the right is the bar, the higher the average yield per hectare in a given country. And so as you can see, Vietnam and Brazil lead the way. So these are two countries that are very large and that have very high yields, much higher than everywhere else. And you have places with very low yields, okay? So then what this generates is a situation in which actually the demand for coffee is being supplied. Remember, demand always equals supply, and the demand is equal supply in this case because there are countries that are very efficient and are producing a lot of coffee. This keeps prices low, and with prices relatively low, the countries with low yields, they're gonna become uncompetitive, okay? They're gonna produce less, they're gonna struggle. Now, why is this a vicious cycle? Well, it's a vicious cycle because if you take more of a medium-term perspective or a long-term perspective, this low price, the exit of less efficient origin, will make differentiation harder, and less of differentiation means commodification, means lower prices, okay? So this is why potentially this is a cycle, and there are external pressure. Well, there are input costs that are increasing, and they increase particularly so in those places where farms are small, which happen to be the places where the yields are small. Probably the two things are not unrelated to each other. Of course, the big pressure also comes from climate change. You have all heard about projections that are between pessimistic and very pessimistic about what's going to happen. And then finally, I would add that there are also pressures that come from new regulation, because the cost of complying with the new regulation are not symmetrically distributed across countries. It's clear that the large guys are in a much better position to comply with the new rules. Okay, so as a result, for instance, there's been a lot of conversation about living income. We see, and this I'm just copying a picture from the coffee barometer that was kind of presented to you yesterday evening. We see very large living income gaps, by which we mean that the actual income of the average farmer in a country is very different, it's much lower than the income probably required for having a decent living. Now, I'll return to this living income business later on. Why is it that the gap is so large? Well, because of low yields, of low margins for the farmers, and very small farms. And I should add that I'm not aware of any bundle of interventions that kind of remotely come close to kind of fill this income gap. Okay, so we understand what the problem is in a way, or kind of the situation. But is there really a reason to intervene in the market? Do we really need to come up with the new facilities? It's always good to start kind of being a little bit devil's advocate. The first objection I say is a macro one. Look, the market is the market. The market tends to concentrate supply in the most efficient origins. The best cure for low prices is low prices. With low prices, suppliers will leave, and therefore prices will tend to go up. It's not that I think that this line of argument necessarily applies very well to coffee. However, it has a merit, because it has a merit to squarely focus our attention on those things that the market certainly does not do. And those things are public goods. So, for instance, there are maybe very large R&D requirements, and if you adhere to this view, you would say, well, okay, you know what? We should just focus on that. Let the market play the way it should play, and then let's focus our public funds and our investment onto funding R&D. Okay. Let's say that we disagree with this laissez-faire view. Is there still a rationale for the fund? I think here we need to go a little bit at the lower level, and the tough question that we need to ask is whether, okay, there might be need for financing and for mobilizing financing, but why should this need be met by a specifically newly designed investment vehicle? Why is it that what we are doing at the moment is not enough? Or, why not simply scale up other existing kind of funds that are already present in the sector? And I think that we need to make progress. We need to have good answer to this question, and I'm sure that some of these questions will be debated in the remaining part of the session. I have some views on some tentative answer for this fund, but I think we are long way out before we can really firm them up. And then finally, we could also ask, how large should this fund be? So there's previous studies that have put out very, very large numbers. My view on this subject is that right now is very hard to say, and we must be very humble and extremely cautious. And there are, I would say, 3 reasons why I would take this perspective. The first one is that the figure that I showed you before at the corner, bottom corner on the left. There is enormous heterogeneity within countries. So we should be very skeptical of approaches that rely on kind of average figures and aggregate figures, because the heterogeneity within Ethiopia, there is a little bit of Vietnam and a little bit of Uganda, if you like. This is what I mean by heterogeneity. Even within the poorest origin, the origins with lower yield, you have farms that are doing fine and you have farms that are struggling the most. So heterogeneity is really pervasive. The second thing is that when we start thinking, okay, but you want to do the investment fund, this vehicle, but what are the projects that you should fund? There, I think the devil is in the detail. It's not only that, what should we do, what should we fund, but it's also how should we do it. So, and again, the implementation, the exact type of projects you need to do needs to match this heterogeneity. And then the final reason why I would be very kind of cautious at the moment is that we have very little evidence. And so now I'm going to move to the second part of my intervention, and I'm going to do so by telling you a story, okay? I think it's a story I'm going to take you not too far from here. I'm going to take you to rural Bangladesh. And I'm going to tell you the story of a collaboration between BRAC, which is the largest NGO in the world, and colleagues of mine at the London School of Economics. And I'm going to tell you what this collaboration was about. I want to stress that what I'm about to tell you, the program is not so important, but it's the collaboration and what happened as a result of the collaboration that is important. So essentially, the collaboration started with the question. So BRAC had developed the Ultra Poor program, okay? And they met these weird academics from the London School, which tend to be very curious people. And there was a question which is, okay, but what is the impact of this Ultra Poor program? Does it help lifting these extremely poor women in rural Bangladesh out of poverty? The program is essentially, so we are talking about a program targeted at the population that is even more disadvantaged than the poorest coffee farmers. So it's a very difficult population to work with. And the figure on the right tells you what the program is about. The program is essentially go to the people at the very left, those that have the least assets. These are people essentially that have no assets. Give them a cow and the training to operate the cow, okay? And then see what happens. The beauty of the collaboration is that the academics and BRAC partner up to rigorously and independently evaluate this program, okay? So it's not just, oh, I do the program, let's see what happens. It was a little bit more sophisticated. We start rolling out the program in some villages. We don't do it for a few years in other villages. We randomly choose these villages and we see what happens over time. So this gives you a very precise measure of the impact of the program. Now, the figures here illustrate very high returns from this program. The program benefits are about 5 times larger than its cost. And the program estimated an internal rate of return of about 20%, which is very, very high. Okay, so this is the story up to a certain point. The interesting part is what happens next. Now, what happens next is that because there was a rigorous evaluation in place that demonstrated impact, the program was scaled up to other countries. So now you have the evidence, you can go to see the World Bank, you can still go and see Bill Gates and say, look, we need to do this graduation program in other places. And if you do the evaluation in other places, you see, like I show on the left, that maybe there's going to be heterogeneity. The program, in this case, seems to have worked relatively well in most countries. In Honduras, for whatever reason, it didn't have a lot of impact. So the transformative impact here was from the evaluation. So you start with a design based on local context. You conduct a rigorous evaluation. This is a public good. The information generated by the evaluation is a public good, rigorous and independent. And as a result of the evidence, nowadays, ultra-poor programs, there are about 100 of them around the world in more than 40 countries. 1/3 of these programs are implemented by government, not by NGO. So the evidence completely shifted the approach to social security and to the kind of anti-poverty alleviation programs, and millions of people have been reached. So what about coffee? What about coffee? Well, there are a lot of programs in coffee. The ICO task force shared with me a very nice effort that they have made to try to create a directory, if you like, or a list of all the programs that are happening in coffee. There are many of them, many that are done by or supported by the large private companies. One thing that we see is that there are extraordinarily different in terms of the cost per farmers of this program. And what about impact? We don't know. There's very little information out there on impact. So there is very little comparable information on implementation costs, despite the fact that the program differ in their costs enormously. There's very little comparable information on the net present value. But if these are the investments that we are supposed to fund, how are we going to fund them if we don't know exactly what works and what are the returns? And then there's also almost no rigorous and independent evaluation of this program in terms of their impact, say, on smallholder farmers. So I would say that the next steps, one concrete next step is that we should try to start working a little bit better in terms of sharing knowledge and evaluating pilots. So let me put forward a concrete proposal. So let's go back to the living income, which we discussed before with the slides from the barometer. There's a lot of conversation about living income. I think there's a lot of useful benchmarking that is going on. There's a significant chance, this is my own reading and I could be wrong on this, that not too far in the future, living income might be included in legislation. Should this happen without evidence? Where is the evidence? I think it would be better if this is discussed having some evidence. So a very concrete proposal would be that we can start working on today is do the following. Find one or more committed companies and donors, because here the public good is the information. Identify one or more suitable origins and conduct a pilot and rigorously evaluate it. Keep a set of farmers to whom you do business as usual. To a set of farmers, provide living income, so much higher payment. And I would say to another set of farmers, provide a payment that is equivalent but not tied to coffee. Because really the benchmark here for living income should be the social security, I would say, counterfactual. It's not the absence of resources. And then let's see what happens. I don't know the answer to what I can speculate about what I think would happen, but I think that we do not know. And the point here is that we need to have answer to this and similar type of questions. Now, there are many more issues than living income. There's land across all countries. There's what I'm showing at the top left is the correlation between the percentage of income of farmers that come from coffee relative to land size. So as you can see, the relationship is increasing everywhere, which means that the small farmers that we are targeting to try to help, these are people that predominantly do not rely on coffee for their income. There are issues surrounding gender. In every single country, women have conditional on operating plantation, they tend to have slightly lower yields, for instance. And then, very important, there are issues around age. Many farmers, we have discussed it before, many farmers are old, and if you look at the relationship between the age of the farmers and yields is the one at the bottom left. It's an inverted U-shape, which means that the very old farmer tends to have much, much lower yields. This to me suggests that the reason why these farmers are still farming coffee, even though they do not have the resources or the incentive, the horizon to invest, is because coffee is their pension. But if that's the problem, then let's try to think about how to provide pensions to these folks, rather than kind of try to keep them in coffee. I think I'm done. What I'm proposing here is essentially, alongside thinking about the fund, we should think about a learning agenda, and whoever wants to join would be very welcome to do so. Thank you so much, and I'll pass it on to, I'm not sure who, but someone who will come here. Thank you.
Yeah, thank you, Racco. It was a very wonderful presentation outlining the need for a coffee fund. I liked it the way he said what to do, what not to do, and how to do it. Finally, he has given a good example of BRAC, which implements the government program in Bangladesh successfully, and he has very equivocally supported for a coffee fund. Thank you, Professor Rakov. Now I call upon Mr. Emmanuel Santi to make the presentation.
I'd like to start off by saying how humbled I am and terrified at the same time to try to present you something where someone like a big name like Jeffrey Sachs did not actually manage to pull off. And I think maybe one of the reasons why ICO proposed this assignment was, can you hear?
No, we cannot hear.
You cannot hear?
We cannot hear.
You can hear? All right. So is that I used to be a fund manager of an agricultural business fund, and I was terrified about investing into coffee. And so maybe one of the reasons why I was engaged is like if you are able to, you know, create a vehicle that encourages people to invest into coffee, even by the most reluctant investors, maybe you're going to be able to change the world. And so that's a challenge over here, and I appreciate ICO for the trust. And another thing that I think the reason why we will be maybe succeeded is that we have started a co-creation program, a co-creation approach. We are not here presenting a solution of a fund. We are not even calling it a fund. We're calling it a vehicle, and what we are presenting today is a framework for conversation, some basic first ideas, but the whole agenda is to really co-create this. We started this morning with some focus sessions with the private sector, with public sector, and this is the beginning of a journey that will bring this idea to life. So first of all, just going back to Rocco's first points about why we need this fund. I mean, it's just to summarize, coffee farming is a major source of livelihood for millions of people. Despite that, access to finance is a persistent challenge, as you all know, as investment is seen as very risky. Like I used to see coffee as very risky in my previous job. But many farmers, especially smallholders, are now abandoning the coffee. Other speakers have spoken about it, due to low income, climate change, and market volatility. So this shift could actually jeopardize the future of the industry. Other speakers have spoken about it, and income for the entire coffee industry. So this really calls for a need for a dedicated global tool involving all the stakeholders, because we all have a stake into this. So to come up with this framework, we started doing a very preliminary mapping, and it's in no way this is expected to be an exhaustive mapping. You can see a few names of funds that we have been looking at because we have taken a special interest in different aspects of this fund. First and foremost, the Global Coffee Fund idea of Jeffrey Sachs, which was very interesting in terms of his focus, linkages with national sustainability plans idea, but in our view probably were a bit too heavy on governance, too political, too ambitious, and of course never took off. So there must be some reasons. So we are digging into those reasons. Farm Fit Fund is another interesting fund. What is very interesting is involvement of the multinationals, still very much limited from coffee. ABC Fund, very interesting. Agribusiness Capital Fund, it's very interesting in terms of well-designed, blended finance structure. Governance is actually something that we can learn from, limited focus on coffee. Aceli, Coffee Resilience Fund, there's quite a few you can see, you can take a look at it. I'm sure many of you are familiar with, but let's also focus on a last, maybe less known vehicle that has created a nice corporate structure, which is one of the ideas that we're looking into instead of looking at a traditional fund. So we'll talk today about investment vehicle because it's still the beginning of a conversation. And what we would like, because we are as the beginning of the conversation, we would really like to set some clarity and agree upon some common goals, common value proposition. So what it is, this animal? First of all, it's a global initiative focused on coffee with local subsidiaries, local ventures, built around leadership of private sectors, share responsibility of public and private players. So we want this vehicle to be also highly complementary and build upon the learning and the lessons from other activities, other funds, other vehicles. As previously other speakers said, there are a lot of things out there. We are not working in isolation, but also be realistic with a phased approach we will present in a few minutes. We would like this to have a private sector governance, which can really attract private sector money. We have seen a lot of the funds that have been heavily skewed to public sector governments that have failed to really take off and attract private sector money. And also leveraging, and it's probably one unique feature of coffee companies for pipeline generation. We heard this morning, there's a lot of discussions about whether there is pipeline. We want to work with coffee companies to tap on their existing pipeline, but also I think there is a big call for technical assistance to actually generate these pipelines. So what are the key parameters? What are the main goals? We had an interesting discussion this morning with the Global Leaders Forum, with the governments about what are the key goals, and then we really would like to propose that the very center is sustainability of a livelihood of smallholder coffee farmers. So this vehicle should really be focused on the weakest link of the value chain, which is really where the farmers are. Farmers, cooperatives, aggregators, and what we'll be looking at is the 4 key elements: improving productivity, mitigating price volatility, financing resilience to climate change, and broaden access to finance for rejuvenation and new plantations. Now, we are proposing that this vehicle may have integrated components. We've seen a lot of funds that are doing either TAs, technical assistance, or only investing directly in just working capital. The needs are there, are very big, and only with an integrated approach, we can really address systematically the daunting challenges of farmers in this sector. So we propose to have 3 major components: 1, direct catalytic funding; 2, cooperatives, farm organization, SMEs in underfinanced yet profitable segments of the agricultural value chain, with preferences given to producers working in value chain of coffee companies investing in potential fund or vehicle, whatever it's called. Indirect funding. I mean, banks are still playing a predominant role in terms of access to financing. Local banks in many countries are extremely reluctant to investing in coffee. They may invest in other agriculture commodities or products, and we propose that some of the money should go into pushing more banks on lending to coffee farmers. And then the technical assistance. It's key to have a technical assistance which is very well integrated, and it doesn't just serve petty interests of someone who wants to do some funny experimentation, but it's really, really well aligned to the investment process. So what's the main idea? Many of you are familiar with the structure, the classic structure of a blended finance, where you have essentially the donors over here that provide the capital that takes the biggest amount of risk. Then you have coffee companies, and that's one novelty. We like them to really invest in their own shares into the vehicle, and leverage also DFIs, impact investors also invest into this. We believe that if we start a vehicle like this over a number of years, we can create a proof of concept, and we'll be able to attract also more commercial investors which can invest after the fund is clearly proven its track record. Now, one another unique feature of this vehicle is that it's very much interlinked to what is happening on the ground. And the idea is to having a global vehicle that can attract the capital from all those players we talked about, but actually funnel and channel it to country vehicles. There are a lot of countries where there's already vehicles that are working. We like to see how we can interact, and also governments. We like to stimulate also governments' own participation in those countries that will choose to invest. Key advantages is we can link up on and tapping on country programs, and we believe that we have higher capacity to attract investors both at global level, as you see in the previous slides, but also at the local level in the countries concerned. And then here is a bit of a roadmap. Again, we don't want to present something that is super ambitious, that will take forever to actually materialize. We believe in a phased approach. I think Rocco touched upon it, which basically looks at 3 main phases. A main phase, we would like to create a small grant facility that can, create a proof of concept, can provide repayable grants to non-suppliers in the value chain, test the model, get the evidence that Rocco was speaking about, and some of that reflow of cash will We'd like to see that flowing into the next phase, the phase 2, where the investment vehicle, which evidently takes some time to set up, so it'll give you the grant facility will give us the time to get this up and running. But in the meanwhile, looking at the initial capitalization and the startup phase composed mostly by donors, coffee companies, and potentially DFIs. With the view of going to the growth stage where the investment vehicle will have gained a track record, profitability, and be able to attract much greater commercial investment by people that otherwise would not invest in the sector. And this, the structure that we've been already talking about, a lot of structures, and we would like to really engage with you to see how this basic framework can be turned into a reality. We are here to open a conversations, but we believe that with a gradual approach and flexible approach, if we do the step right, this is a fund can consequently, not in 2 years, not in 3 years, but with the time that it takes to get to this, expand, to grow the asset under management, to potentially reach the big numbers that Jeffrey Sachs actually had indicated. Thank you.
Thank you, Emmanuel Santi. I think you reiterated the need for a global investment vehicle for coffee, and you have really made how it can happen. The rationale was very convincing, and the mapping of other initiatives to establish this special vehicle has been well brought out. I really appreciate the way you made the analysis and the structure that should be further developed. The roadmap was also very clear. Friends, I think this presentation has given us that a global fund for coffee is a necessity, and it can be implemented in other countries in a subsidiary way. Thank you, Santi, again. Well, now I call upon Mr. Henry Illy, Chairman of the Illy Cafe, to make the presentation. Yeah, Henry Illy is the Chairman of the Illy Cafe, SPA, a benefit company founded in Trieste in 1993 with the mission of offering the greatest coffee to the world, and a co-chair of the Regenerative Society Foundation. So, I request you.
Thank you so much, Mr. Chairman. Good afternoon, ladies and gentlemen. It's really a privilege to be here today. It has been 1 year since we launched the idea of the Coffee Resilience Fund, and I must acknowledge that a great amount of work has been done. I appreciate it so much, and I thank for the support of the IC organization. Before giving you a few remarks, let me make some premises. First of all, I'm here to represent the coffee people, particularly growers in the coffee plantation. Not my company, so I hope I have no bias in what I'm going to say. Second, I'm going to present you a possible vision, high-level vision, helicopter view, to be shared, to be agreed upon, with an humble approach, which means open-minded, inclusive, and rational. So it's really for a debate. So I like the framework which has been presented this morning about the why, the how, and the what, which I will follow. As far as the why is concerned, if we believe that we are facing an existential problem, not the business as usual, but with the emerging exponential impact of climate change. If we feel that this is an existential problem, then we shall continue this conversation, otherwise not. And in this case, the imperative would be to ensure business continuity, coffee security, you name it, but as well as millions of jobs in coffee plantations. One single imperative. Then, if critical mass is needed, the maximum possible critical mass is needed, then we need a pre-competitive, inclusive, risk management investment program. This is what we are talking about, risk management. And this risk management investment program would scale up the already laudable private initiatives, some of which we have heard today. Scale up. A pre-competitive approach doesn't interfere with the competitive one. The day you decide to join forces for a pre-competitive program, that means there are some things in the industry which cannot be made by one single company. This is why we have to think about the critical mass. And I think that if these are the possible whys, it's time to reach a consensus about. Is this a reason why to continue talking about this Coffee Resilience Fund, yes or no? This, I think, should be an outcome for this conference. Imagine that the outcome is, yes, we shall at least continue the conversation. How could we address the opportunity? I like working by principles. Few simple principles. We are talking about adaptation to climate change as the single imperative. The rest will come. Because if you adapt to climate change, then you can ensure production, preserve jobs. But the initiatives that you take for adapting to climate change also have an impact on productivity and on quality. That means that you can increase revenues and salaries and have a positive social impact, which you might say is the first point, but there is a kind of a catch-22 when you talk about sustainability. Which one comes first? The economical sustainability, the social sustainability, or the environmental one? I learned that if an initiative is not economically sustainable, it doesn't last for long. It's not sustainable. I learned that in order to have social sustainability with educational problems, welfare, whatever is needed for livelihood, you need first economical sustainability. And I learned that in order to have environmental sustainability, you need to have a very, very, very strong engagement from people. Because one person is at the same time a consumer, a worker, a voter, and also an investor with pension plan. So we need to focus on people. This is a people idea. Other principle is there is no enough cash flow from a coffee plantation to pay back the minimum investment needed for building resilience. We would need to invest minimum $1,000 per hectare already existing. No way to pay back with the current cash flow, with the current prices and volatility. So the way to pay back this investment is to integrate the whole value chain. Because paradoxically, although 90% of the value chain is in consuming countries, they are totally relying upon the investment made in coffee plantations, which producing countries represent 10%. So we start thinking in a way which we are all on the same boat, not trying to divide producing countries and consumer countries. This doesn't work. It's only one battlefield. So we shall consolidate the cash flow from retail value of the coffee. This will enough cash flow to pay back investments. Third fourth principle, there should be an independent governance for such a plan. If it is pre-competitive inclusive, it should be independent governance. And last but not least, the program can only work if it would be bottom-up. Project proposal should come from producing countries. Of course, prioritize producing countries, not all of them. There should be a priority list. And besides project proposal to the investment committee, producing countries should invest, put a commitment, put a chip on the investment itself, which would equivalent minimum to the percentage of revenues for producing countries, which is around 10–15%. So imagine that you invest 100 and you have the project proposal coming from a country investing minimum $10–15. So these are principles. If this principle would one day, hopefully, agreed upon, what could be the possible vision, initiative? So we need an architecture. We are talking here at the, let me say, temple of the International Coffee Organization, the sole intergovernmental organization specialized in agreements to prioritize and set the rules of the game. We would need an agreement specific or a specific part of a larger agreement for the Coffee Resilience Fund. We would need an entity, a legal entity, independent, representing the investment of the private coffee sector. And the idea would to have a World Coffee Foundation with an independent governance, managing the funds, let's say, provided, financed, funded by the industry. And this would allow, not only because there is private money, but also because there is the credibility ensured by the institutional framework by the ICO and an independent foundation, it would open the doors for significant development finance, also because we know how important are the coffee producing countries for multiple reasons. So the asset allocation of this architecture could be that investments are specific for agronomical practices. I've been visiting coffee farms since 33 years, an average of 10 farms per year. It's always the same story. We must be honest. It's very basic. It's totally underinvestment. There is no money. There are no assets. There is no significant knowledge. How do you want to be resilient and adapt to climate change if we don't upgrade the agronomical practices to the cutting edge precision farming which are adopted by most of the world commodities? This requires money, substantial amounts of investment and in assets. And the second being renovation. Plants are too old. The majority of, with the exception of Brazil, must be said, the majority of plants cultivated are still a legacy from the colonial times. Too old, low productivity, no resilience to disease and pests, etc., can only get worse in the future if we don't renovate these plantations. And we shall renovate these plantations with new varieties, more resilient to pest and disease and extreme weather conditions. This is the imperative. We don't do that. This asset allocation should be mostly equity, because we are talking of $1,000 per hectare. In 10 years, we would have invested $1,000 to all existing hectares. So equity is a necessity, more than debt, but could be debt as well, and to a lesser extent, also grants. Why not, for smaller projects? There is also an opportunity for crop insurance that could be addressed with such a scheme, helping insurer to insure crops which they don't do now because it's too risky. As far as the fundraising is concerned, the private sector, we, us, roasters, traders, you name it, roasted coffee per pound, you know, roasted and ground on the shelf of a supermarket or in a coffee shop. We would be all together in this foundation, the anchor investor. The idea is to commit to pay 1 or 2 cents per pound, which is around 1% of the cost of 1 pound of coffee, to the foundation. 1 or 2 cents would be 220, 440 million dollars per year, which would represent a gigantic leverage to provide collaterals, to invest directly in equity projects, to leverage impact investments as well, besides development finance. And last but not least, we also need one infrastructural, let's say, asset, which would be a coffee database. Because with no information, you cannot assess the risk. No way. That means that we would need, and this should be one of the requirements of the agreement, for producing countries participating to the project to commit to provide the necessary data for project evaluation and project performance assessment. Thank you very much, and I wish you a wonderful forum.
Thank you, Andrew Lilly. We are aware that you are the chairman of the Altagama Foundation, and you have done a splendid job.
Thank you.
In this organization, representing the most important brands of the Italian cultural and creative industry. I think your experience in founding this foundation and replicating it for the coffee industry is a good suggestion. In the process, you have also indicated how the coffee sector should be competitive and how it should scale up and should be inclusive. You have elaborated on the need for the adaptation of the coffee producers for climate change and how it should become resilient to combat those changes. Thank you very much. It was a great analysis, very useful, for a sustainable and competitive value chain for coffee. Thank you, sir. Now I call upon Mr. Oscar Schabs, Division President Stonex, to make his presentation.
Hello, everybody. First of all, I want to thank the organizers for allowing me this opportunity to come present to you all a story. A story of, as Dr. Ely said, risk management. Before I show you the only slide I brought you, I'm going to tell you a little bit about why I'm here and why my passion to present to you all. I'm a 4th generation coffee producer in Central America. I left Guatemala when I was 15 years old, got my education in the US, and started trading risk management products 35 years ago. My thought was that it would be a great way to how to contribute to a tremendously volatile market. I don't have to tell you all how volatile coffee is. So I'm here just to tell you a few stories about what I have seen in 35 years, a few programs that have been attempted and some successful. I'll tell you more about the successful stories that I have witnessed in commodities, not necessarily coffee, but it's always been an initiative to attempt to manage a volatility that we consider in coffee historical annual volatility of 35%. So it's great to tell you that the commodity that we live with and helps us survive and helps communities. Unfortunately, I cannot tell you which way it's going. I know it can move 35%, but I don't know if it's up or down. So once you're done finishing my disclaimer, because I may be wrong or right, that's basically the last 50 years, let me just check something here, of our fabulous commodity coffee. Everything you see there that breaks out of the middle range that you can basically establish. And if you can't read the little red boxes, quickly I'll tell you a little bit about them. 1975, that big peak up there, it's a frost. Then, as somebody already said, low prices are fixed by low prices, and high prices are fixed by high prices. Producers, coffee producers in general, are pretty resilient because when they get a price like that, $3 over, we tend to just want to produce more. And in all these world of commodities, inelastic as they are, we end up overshooting. And this pendulum brings a world of hurt. And right there is the overproduction of how the world answered to $3 prices. Then we have the help or the contribution of an ICO with economic conditions that we lived in the late 70s, 80s. It broke again in the 86. Drought in Brazil. Again, it's a shock. And that is us risk managers have to deal with, but we cannot help. And again, we come now to a very important place, which is climate. Those peaks up there, the last 4 from right to left, whichever how you're looking at it, have been climate related to the point of concentration in production. Those big jumps are when Brazil gets hit with a climate situation. How do we manage that? Very, very difficult because we cannot anticipate it. But the story goes to what has happened in other commodities that are less volatile, such as corn in Mexico. Through a program that the Mexican government put in place early 2000s by the agricultural ministry, they attempted to try to bring risk management to the masses. And I think, my humble opinion, they did a great job. So that's the first story. The program was named the Acerca government. And what they attempted to do was to establish a fair price for corn. And that's difficult because the day when we make a decision, we make decisions with the information we have then. That's second. We pull the trigger, and that is how we feel we are doing our best. So what this program did was establish a place where the buyer and the seller could transact. But what if these markets moved? What if the price changed 6 months ahead? How do you do that? If the market goes up, you have the risk, latent risk of default. If the market goes down, maybe the buyer doesn't like it because the competition didn't do it. So now there's competition on the buy side. So what the program did was basically finance a financial instrument, the premium on a financial instrument, which I will call price insurance Not to get too technical, but in my world, that's a put and a call. So interestingly enough, the instrument that protects to the downside is usually what we recommend to a producer to buy, I'm sorry. You pay a premium like an insurance policy. If you own it, the product goes down, you have an insurance policy that can hold that. The other way around for a buyer with a call. What they did was fix the price on both sides, get the buyer the put, in case it goes down, he could be compensated financially, give the seller the call, in case it went higher, something like this could have happened, and then he was contributed by the financial impact of that financial product, the call. Now, the interesting thing is leverage, and it worked for many, many years. If the market was quiet, flat, no big changes in the structure, everybody happy, they got their exchange of commodity, exchange of value, they had their products, and they could live along. If the market then went down, the buyer would be compensated. And if the market went up, the producer always delivered, no defaults, but they got a little bit of cash. Or a lot of cash, depending on the move. So that's one story of success that we witnessed. It worked for a long time. Governments are governments. Things went away about 4 years ago. Another story that is really interesting. Agriculture by contract. So here comes a private enterprise and says, Mr. Farmer, I am going to contract with you. They are financing the premium, and they say, I'm buying your product, and I'm also going to help you, and I'm going to buy that call for you. In case the market goes up, you still deliver me. And that's very successful. Again, leverage. Instead of having a massive amount of money and handing money out to the small stakeholder, what they're doing is, in case something happens, there is something that can help. And it is a financial instrument with leverage, very, very large leverage, which is the options market. Most people are going to tell me, Oscar, that's speculating, you're in the futures market, that's the dark side of the equation. It's not. I'm here to tell you 35 years later that these things work if you manage them appropriately. We're talking about a fund, we're talking about controls and certain things that can be put in place, governance to manage these kinds of things. Leverage is good when applied correctly. The third story that we've seen and witnessed, and it is currently working, again, this one's on the private sector as well, has to do with financing. But it has to do with financing with a buyer. So what's one of the problems that we've encountered through the years is that a lot of times the treasury, the CFO, the cost of money forces the buyers to have no inventory, forces the buyers just-in-time inventory. And then a pandemic hits and we all freak out because we don't have coffee in the warehouse, and we start, increasing rates of, shipping rates and stuff. So what these people decided to do, have a third party in the middle that could finance. They would go out, or they do go out right now, they finance and they carry. They directly buy the product, put it in the warehouse, and they have someone that's financing it. Yes, the interest rates have changed now, more expensive, but it's just about helping our community. So like Dr. Ely was saying, we all have to figure out a solution. What's interesting is that that buyer doesn't have that product and that cost in their balance sheet, is in a third-party balance sheet. So now that financial entity is delivering just-in-time product that is already purchased closer to the end user, closer to the factory and the roaster. That's working really good, because when they need the product, they lift the phone and call the warehouse and say, deliver whatever I need, 3-4 containers, whatever it is that they need. They pay for it, but that producer already has their money. That producer can already do and start working on the next crop and helping his family grow. There's cash flow. So then, as time goes on in all these three stories, what happens is there is more balanced cash flow throughout the year. As a producer, I can tell you that we really get one chunk of cash flow. We have a coffee production that is 1 year. And a lot of times we're sitting here in October, new coffee year is next week. Lots of producers haven't delivered previous year's crop, and who's financing it? The weak guy. I'm not talking about the big coffee producers around the world. I'm talking the small guys. I go to a co-op, a guy that hasn't yet been able to take that coffee to be shipped. So those are things that need to be like considered, thought about. There are ways to mitigate these things. The low numbers there, just to let you guys know that if you can't see, the lowest of the low is 2 points. The first one is the breakup of ICO in 1991. When I started in the business, I started in 89. And then we had ACPC controls of inventory, withholding coffees around the world. 20% was being withheld. We had a little pop. That didn't really help much. And then we had a frost in Brazil in 95, big rally. And guess what happened? We overproduced, and that lowest low is really overproduction. So that graph there is just to let you all know, and Dr. Ali mentioned it, is risk management. This market is not easy to manage when it comes to risk. There's instruments that can be used. My message to you all after these 3 stories is all of these 3 stories have in there the correct way of managing leverage. And if we have the right vehicle to manage that leverage, to help the smaller stakeholder that cannot get our services or come into being able to manage their own futures account or manage their own risk because they're small, there are ways to transfer that knowledge, transfer that impact of these markets without having to hand out massive amounts of money to smaller guys and then, honestly pray that we get paybacks on those. There's ways of doing it. There's experience in the marketplace. There's governments that have done it. There are companies, private enterprise doing it now. All I want to say is honored to be here. I think the stories hold a good amount of examples and positive training and positive thoughts about what can be done in financial markets. Like I said, I am a coffee producer that some people tell me I went to the dark side because I'm in the financial world. I'm a Wall Street guy. My life as a move forward is how to bring those experiences to what brought me here. And I'm only standing here in front of you guys because I'm a coffee producer. So thank you very much, and let's work together.
Thank you, Oscar Shapes. I think you have depicted how Arabica prices have been moving for the last 50 years with very violent fluctuations in certain years, and there are indication of some cycles and irregular fluctuations often at regular and irregular intervals also. Well, this really affects the coffee growers as well as the coffee market to a great extent. In fact, the producers have to face a lot of market risk. And he also shared some case studies wherein the risk can be mitigated or minimized to some extent. He indicated the case study of the financial market instruments that are being used, and also about the agricultural by contract. Certainly this agriculture by contract is practiced in many parts of the world, even in India, even in coffee. The Tata Coffee Limited, it works with the small growers buying their ripe coffee because these small producers cannot process the coffee. And we have also found that is quite useful, and this is one way of corporate supporting the small growers. In the process, the coffee company also is benefited because our installed capacity could be used and our volumes could also be increased. Then also he shared the experience of the financing. Certainly all this can help the farmers to protect themselves from the price fluctuation in the market. Thank you again, Shop, for sharing your experience. Well, friends, we have completed the main speakers in this session on in the financing mechanism and opportunities for the coffee sector. Now we will have two panelists who will further add, their thinking on the financing mechanism and opportunities. The first speaker will be Miss Jennifer Fast. She will speak, she will wrap up the presentation on the creation of a coffee fund. She is the founder and managing partner of Fast Global Partners Limited. Jennifer, please.
Wonderful. Well, thank you very much for having me here today. This is my first time in India, and it is a great pleasure to be here and to be here at this event. I'm going to just speak very briefly about the creation of a coffee fund. I have the pleasure of being an advisor to the International Trade Center, and that's why I'm here today. We've also been thinking about innovative mechanisms to support finance and investment in the coffee industry, and have been pleased to be a part of this panel and other discussions to consider new ways to encourage investment, and investments in particular in the most needed areas of the value chain. So as we look at the challenges for investment and finance into this space, we really look at bringing together three worlds in a very pre-competitive way. And we stress that word pre-competitive. You're bringing finance and investment together with corporates, farmers, MSMEs, and members of the coffee value chain, in addition to development and impact. We feel very strongly that new and innovative vehicles must have a very strong focus on development and impact. And when we think of impact, we think of climate change mitigation, adaptation, net zero, and a variety of other important development and impact metrics such as job creation and growth, livelihood and incomes, gender lens, investing, truly inclusive and affordable investment opportunities for all. This must cater simultaneously to farmer requirements and SMEs needs. At ITC, we have a pleasure of working very closely with MSMEs on the ground that are facing the challenges day in and day out that we have highlighted here and we continue to speak about. We also need to be sensitive to buyer and industry requirements, but also, of course, not forgetting the important requirements that financial institutions are going to have to come together in order to bring investment and finance into this space. So what are some of the key requirements that we feel are necessary for any new and innovative investment mechanisms into this space? Coordination and collaboration and the alignment of interests are going to be critical. And when we think of the alignment of interests, I do think of not just requirements for needs, but most importantly to financial commitments and financial interests. Goes back to skin in the game, right? Interest alignment often has to have financial alignments as well. We feel that there is an important need for co-investments from investors and governments and donors. And we also, again, going back to the point from the previous slide about the importance of bringing impact, not just ESG to the discussion, but true impact that makes a difference environmentally and socially in the lives of the farmers. Information sharing and segmentation is going to also be incredibly important to any investment vehicle that is created. The needs of Brazil are going to be very different from Uganda. Key parameters for any investment vehicle that is created should again include very high impact from both the environmental and a social perspective. And we also feel very passionately about trying to address the missing middle. There seems to be investment, private other impact investors and private sector investors that are focusing on the higher levels of the market. And then you've got microfinance at the lower ends. And the discussions that I've had with multiple financial players and impact investors, there's a deep need in ticket sizes below $1 million and above what would be typically covered by microfinance institutions. There continues to be a theme that there is a missing middle that is not getting investment in the capital that they need to thrive. We firmly believe in patient capital, capital that doesn't necessarily need strict timeframes for return, and we also would believe that any new investment vehicle or investment vehicles, I don't necessarily think that one is going to be enough to service all in this vast and large industry, is going to need a strong component of technical assistance if you're truly going to be able to target the missing middle that desperately needs not only the financial support, but the technical assistance support that they need to thrive. Like many other people here, as they've presented different ideas, I believe that there's going to be a very strong need for keystone or anchor investors in order to bring this together. A meeting of minds, a small group of individuals that share trust and share a deep partnership and commitment to getting something done. My understanding is that a lot of conversations have taken place for years around this, but that there's failure to get action and get meeting of minds together. And in order to bring private sector capital in, so the impact investment space, it's going to be critical for them to see that there is a strong commitment from the coffee industry, not just in words, but also in financial assistance through contributions to it. Strong corporate governance, as mentioned here, is going to be critical, and strong corporate governance that will encourage private sector financings to come into it. And last but not least, going back to that important and enduring theme of impact and investment, it is critical that producers and producer countries are a key constituent, a key stakeholder in any mechanism that is created. Thank you very much, and we look forward to continuing the dialogue about the creation of new and innovative mechanisms to support the deep need that we see as here.
Thank you, Ms. Jennifer Fast, for outlining the challenges, requirements, and the parameters, various parameters for establishing a coffee fund and how to implement it. Thank you very much. Well, now I call upon Mr. Mahesh, the General Manager of the National Bank for Agriculture and Rural Development, a premier bank that is involved in financing the farming sector in this country. Dr. Mahesh has been with the NABARD for the last 25 years and has played a key role in implementing many projects in the form of appraisal, monitoring, and implementation in many states of India. Mr. Mahesh.
Good afternoon, everyone. We have been hearing the Coffee Facility Fund, the investment, other things from the other countries. Let's also have a look at the Indian perspective, where we are doing, what we are doing for the coffee sector. If you look at the coffee sector in the country, NABARD, the National Bank for Agriculture and Rural Development, is one of the apex financial institution, which has been supporting the entire gamut, I would say the holistic approach for development of any sector, any agriculture related or rural development related sector in the country, be it the production, the post-harvest area, the marketing, the infrastructure. As an apex bank, we fund most of the banking institutions in the country for them to on-lend to the farmers. We also support creation of infrastructure the critical infrastructure in terms of rural road connectivity, irrigation facilities, and close to 39 different infrastructural facilities, including market infrastructure, which is essential for any commodity, be it coffee or any other commodity, to really flourish. If you look at the support system available, we talked about financing. For any financing to happen to any particular crop, you need to understand what is the requirement, the credit requirement. So NABARD is also the standing organizing the state level unit cost committees, where we fix the cost of cultivation or establishment of a coffee plantation, and also we support maintenance of coffee estates, be it a smallholder coffee or a larger coffee holdings. That's we call as unit cost for development of coffee sector. If you look at the overall coffee picture, we have several support schemes, be it from NABARD, also from the government of India, the state governments in this country, right from creating infrastructure for the irrigation and road to even market infrastructure. In fact, yesterday we had supported one of the projects for a coffee curing work somewhere in Chikmagalur in Karnataka. So the government of India has come out with a lot of infrastructure support schemes. We call it agri-market infrastructure support facility, where grants are provided for developing market infrastructure for the coffee sector. And that certain infrastructure could be purpose agnostic. Purpose agnostic, when I say, it could not be specifically to coffee, but all related commodities for in any rural areas. When we look at the funding, because today the topic is on financing opportunities and mechanisms. So in this country, if you look at, today the technology has gone to the extent where if there are innumerable number of players who are financing coffee sector, be the formal banking sector, which gets into financing the coffee estates, or to the manufacturing companies who are into processing, microfinance companies who are supporting the smallholders. We have the latest fintechs and neobanks supporting the entire value chain in coffee. We have small finance banks and others stepping in, playing their role. There are a lot of mechanisms emerging for coffee sector. If you look at today, coffee, as we talked today, right in the morning session, we are talking about circular economy and regenerative agriculture. One of the most ecological, agroecological farming. Coffee sector is that way sustainable. So when we talk about sustainable farming, where do we support them? Today we can even think of supporting coffee as towards green financing, green bonds. NABARD is also the national implementing entity for India for the UNFCCC's Adaptation Fund, and also the National Adaptation Fund for Climate Change of India, Government of India, and it's also a direct access entity for Green Climate Fund. So any project in coffee sector which can address the climate adaptation or mitigation can be supported by NABARD in this country. So the opportunities are plenty. How do we put that into a holistic picture? Of course, most of our dealings have been with the growers, small growers. We have not gone much into the manufacturing and the processing segment, but to what extent, if you do not have a production base, the latter thing will not happen. So how do you really support the production base so that sustainability in production is there, so that it can be taken forward by the other value chain players? So if you look at a holistic picture of supporting development of basic infrastructure in terms of irrigation, connectivity, markets, godowns, processing units, then build over a layer of financing for every particular need of the farmer, be it is consumption, because today we have what is called as Kisan Credit Card in India, which supports production expenses and also a part of consumption expenses of the farmer. So have a layer of support of financing the producer for creation of infrastructure in terms of establishing a coffee plantation, support its maintenance through short-term credits, support the value chain players, processors, the transporters who are helping in storage and marketing through investment credits, then help in creation of the marketing infrastructure, and finally help in exports and value addition. So we look at the whole gamut of financing for the entire coffee value chain, and our experience in the past, last coffee we have been working since our establishment about 40 years back. So we have been a major player all along, not only in coffee but all the plantation sector, be it tea, coffee, rubber and cardamom, and also the entire horticulture sector in the country. So this, I am looking at this particular opportunity of establishing a fund, coffee facility, call it investment fund, whatever, reserve, because Government of India had already tried somewhere around 2003 to establish a price stabilization fund, important aspect. The previous speaker talked about the volatility in coffee prices. In 2003, Government of India came out with a price stabilization fund for all the plantation crops, where the government has set up a kitty of fund, and the years where the prices go up, the farmers contribute towards the fund, and the years when the prices crash, the fund supports the farmers. So that's the type of mechanism which is already done 20 years back in this country. Probably when we look at these type of a fund which ITC and others are trying to establish, we should also take the experiences. I saw experience of some 6-7 funds quoted by a first speaker on across various countries on coffee and other commodities. Probably the experience of all other countries can be thought about, and to develop a comprehensive fund which takes care of all those pitfalls which we had in the earlier funds, so that we have a robust fund which takes care of the coffee sector. Thank you so much.
Thank you, Dr. Mahesh, for indicating the activities undertaken by the NABARD in the agricultural value chain, including the plantation crops, particularly the coffee. We are aware that the NABARD is a big bank which also refinances the agricultural projects for other commercial banks. As he indicated, this bank came out with a bond to enhance their capital base, and they have been supporting the agriculture, including the building of the rural roads, market infrastructure, and many other activities. NABARD is quite active and is fully supported by the government and other banks. Thank you for your presentation, and also indicating that the NABARD would like to extend further facilities for the coffee sector. Friends, we have concluded the presentation by the speakers. They have made very good presentation, and also 2 panelists have provided their views. Now we have some time for the audience to make some suggestions based on the presentation made this afternoon. So it's open for discussion. You can indicate your suggestions on what has been proposed. For example, a global investment vehicle or a special fund for coffee was proposed, and many other alternatives for financing the farmers and the small and medium enterprises in coffee sector was also suggested. Kindly make your own suggestions so that we can build up a good proposal in this direction. So now it's open for discussion. You please identify your name and kindly indicate your suggestion. Yeah, Mohan Kumar, you have a point? Yeah, Mike. As I know, Mohan Kumar is a president of the Coffee Growers Federation, which has more than 15 to 20,000 members, and he is very active in the plantation circle. Mr. Mohan Kumar.
Thank you, sir. This question to Dr. Mahesh. Regarding, he expressed the price stabilization fund. Actually, that has failed in the coffee sector. So why can't you establish another type of scheme, because the coffee prices are very volatile. So for the survival of the coffee growers, the finance is very important. I think I request NABARD to develop a different type of scheme to stabilize the coffee prices. Thank you, sir.
Should I respond?
Yeah.
Am I audible?
Yeah, you are.
Yeah, this when the scheme was launched, it's like a kitty is developed and a contribution comes from the farmers when the price is higher than the threshold level. And similarly, when the price falls below a threshold, government will step in and support the farmers. Somehow we did not take up because the farmers were not willing when the prices were going up. So it cannot be a one-way traffic. So probably we need to look at the mechanism in a different way, because there are market intervention schemes for several commodities. Of late, we remember 2013-14, Government of India again set up a price stabilization fund for onion, potato and garlic. We call it top. So onion, potato and tomato, top commodities, because they are highly volatile and they have a severe impact on the overall inflation of the country, because around 43% of the total wholesale inflation comes from agricultural commodities. So it's high time that we look at PSFT, similar arrangement, probably with a different combination, different formulas for setting up to support coffee and other plantation sector. We'll definitely look into it.
Thank you. I have one more. Please, can I go?
Yeah. Be brief.
Sir, during in this World Coffee Conference, some of the delegates from the Brazil, they have come to Sakleshpur, and we had a very good discussion with them. And in their country, the farmers used to get this loans, crop loans, at the rate of 6%. But here in India, it's a double. So why it's a lot of difference? We are small farmers, about 98% in India. Why can't government and NABARD, why can't you support in that angle?
Sir, Government of India does not distinguish between coffee or paddy. Agriculture commodities across India. So already there is a concessional support available from Government of India for any loan taken up to 3 lakh rupees. The farmer gets ultimately at 4% in India. It's 6% in Brazil, it's 4% in India. In Karnataka, it's 0%. So Chikmagalur, your coffee belt in Karnataka falls almost at 0%, up to 3 lakh. Up to 3 lakh. Yeah. If you are a bigger grower, probably the amount is, subvention is not available.
But I have one suggestion, sir. Earlier, the Government of India used to give interest subvention through Coffee Board. Now it has stopped. We have requested Finance Minister also. Why can't you from NABARD suggest the Government of India?
The interest subvention is already available up to 3 lakhs. You are talking about some other subvention?
Yes, yes.
Beyond 3 lakhs?
Beyond 3 lakhs.
Okay.
Thank you, sir.
Thank you.
Thank you, Dr. Mahesh. Yes, please. Mohandas, can you be louder? Yeah, Mohandas is was the chairman of the Kodagu Planters Association.
Hello, I'm Mohandas. Already has introduced me. Thank you, Mr. Tangappa. See, Honorable Prime Minister has said recently in some international arena, Kur coffee, one district, one crop. Probably it is for Mahesh I am asking you. ODOC. What is ODOC? The OD. One crop, one day, one district, one crop. MSME, under MSME, lot of funding is required. I don't know if it is implemented by the industry department or agriculture department is tie-up. Nothing forward is going on in that direction. So what is that? Every district has coffee in entire India. You say agriculture sector, they said yes, everything is agriculture only. Honorable Prime Minister didn't differentiate between agriculture or coffee is agriculture or commerce. It is agriculture. You see, nothing progress is happening. I'm asking every day with the industry department, with the agriculture department. What is happening this? Lot of money through MSME you could do with some 4% interest is there. Lot of finance is there, lot of money is there for quality upgradation in coffee, entire from processing to the R&D at the end. Kindly find out what is the progress in Kodagu it has happened for the planters. If you come to know, then only we'll find out the answer for it. Please look into it, one. And as Mohan Kumar said, that PSF, it was started during our time when I was working in the board. Funds were taken, planters have paid, many of the planters have paid, but unfortunately the scheme took off. And in the middle, many schemes in the government department go like that. Nothing will forward at all. It's closed. So kindly look into it. It's a very good scheme. There are good responsive planters for that to invest. So please revive it if possible. And insurance. There is no insurance for coffee now. Everywhere Mohan Kumar is putting it to the government of India and the state government. The thing is there. Now of course, for areca and pepper it is there, but not include for coffee. Probably they think that coffee is a commercial crop. It comes under commercial plantations. Areca and pepper, even though being grown with coffee, is coupled with this treatment for the coffee. Please see that it should be considered as agriculture. At least through that Prime Minister's program, this scheme. So it will be very helpful. Presently, see this year's problem. We don't have rain. Very shortage. Or we don't know what much of coffee we get in India, and particularly in Karnataka. So please look into it. And another thing, financing. See, Kodagu, 2004 crores from DCC Bank finance is there annually. No, now recently, up to 15 lakhs. Very low interest they are going to give. Why differentiate? I know NABARD is financing DCC Bank also. Is it not? Correct. And you are financing commercial bank. Why this different between cooperative bank and a state bank or a commercial bank? And up to 5 lakhs. No interest. If a farmer takes from the cooperative bank, what a farmer is difference between a cooperative bank and a national bank? Farmer is, for any bank is a bank. Why this? Maybe state government, you may say, answer is refinancing something. I am a farmer. I don't want to go too deep into it. Please see that every farmer, when a cooperative bank is able to do it and do it successfully, you see that this is a bank of Kodagu, how much success it is. Why not commercial banks also give us? You send out 3 lakhs. I am taking loan from Canara Bank. I know that. 3%. Up to 3 lakhs, or 4% up to 3 lakhs.
Mohandas, thank you for a...
So this is the 4 points.
Yeah.
Please answer.
Mohandas, thank you very much. I think you raised certain issues which are some internal, but what you raised about the coffee crop insurance is a major issue. And certainly there are some products available, but the popularity of the scheme is not that high. But I think we need to find out appropriate, products, crop insurance products for coffee. Yeah.
Shall I respond to it?
Yeah, you want to?
Yeah. One district, one product. It's across country, but specifically what is the issue in Kodagu, probably I will talk to you and let me know, understand it. Because I can't comment without actually knowing what is happening in Kodagu. As far as financing by Kodagu DCCB, yes, every district in the country, NABARD is preparing the credit planning. See, we have already almost completing the credit planning for 2024-25. That is for next year, already NABARD has conducted for all the districts in the country. So, which gives a direction for all the financial institutions to finance the sector. If it is Chikmagalur, Hassan, Kodagu in Karnataka, what is the level of financing expected for coffee? We built into our documents. So that is helping the banks to lend. We support almost entirely the cooperative sector in Karnataka or any state for that matter, which helps in funding all the farmers. You yourself are told that cooperation is a state subject. So getting a subsidy, that is a particular interest subvention is coming from the state government. Only Tamil Nadu and Karnataka has got the 0% interest. Many states even don't have the 0% interest. Thank you.
Thank you, Mahesh. Yeah, I think Ramesh Raja.
Hello?
Yes.
Hi, this is working?
Yes,
Hi.
yes, please.
Here? Hi, my name is Bao, and I'm a coffee producer from Vietnam. And now we are financing smallholder farmers in Vietnam by doing, pre-finance the offtake to incentivize them to do regenerative agriculture. So 2 questions I have. One probably for Oscar and Jennifer, and the second probably for Andrea. So first one is, today we finance our farmers from our own balance sheet. Next step is we're gonna try to get grants to do that, to scale. And then there is a very big step between grant and warehouse financing. And so perhaps if you could give some advice on how to close that gap, what are the proof points that are necessary so we can scale the approach? So that's the first question. The second question is for Mr. Andrea, which is simpler. It's what would it take for you to be an anchor investor in this type of blended finance vehicle? Thank you.
Can you, please?
Hello, hello. Okay. Can you hear me?
Yep.
Yeah,
okay. My suggestion would be avail yourself of the right tools to be able to defend your investments. Sometimes when you do a great thing like you are doing, pre-financing, if price conditions change against what you believe is the value of your loan, you should have, the only way to do it is either 2 ways. Pre-sell yourself. When you pre-fund, you get the money so that you can get that coffee if the market goes down. But the best one, again, leverage. Use leverage in your favor. Use the right financial tool so that you can guarantee the value of what you're lending against. And that can be, in my opinion, has to be options. So you have optionality of the market going up or down, and depending on where you are in your value and your exposure. But that allows you to, 1, transfer some of that cost to who you're financing, and 2, ensure that you're going to get delivery and payback because of the value of the coffee itself that you're financing is being protected by something. That would be my 2 things.
Thank you.
Thank you very much. And thank you for your question. My recommendation to you as you move into looking for additional capital to fund your business is do it slowly and do it very thoughtfully, surrounding yourself with a few key partners and people that believe strongly in you. Often when I find entrepreneurs at the stage that you're at and I work with them, you find that they're diluted, not just from a financial perspective, but in their time and their attention. And I know that's challenging where you're at as a founder, not to be all over the place. But so just a personal recommendation is taking it slow and surround yourself with a number of investors and people that really believe in you and believe truly in what you're doing and are in it from a longer perspective of time. So, and happy to speak with you after this a little bit more to better understand what you're doing and the type of funding that you're looking for as you move from kind of grant funding to actually looking for investors and partners, right? Smart money that's going to be with you as you develop your business out.
Thank you.
Thank you.
So,
good afternoon, gentlemen and lady.
I think I have to answer.
Can you hear me?
I have to answer the second, Chairman.
Hi.
Mr. Chairman.
Hold on. Sir?
Can you hear me?
Sir, there's a second part of his question, and I just want to make sure that that we're able to address it. Go ahead.
There was a question for me. What would it take me to be an anchor investor in this? As I said, I'm here to represent the coffee people, not my own company. My own company does already have a foundation. And we work privately as many other companies do. This scheme is an alternative scheme to the pre-competitive one, which is inclusive altogether. The idea is that if we really want to reach a higher critical mass in terms of funding and impact, and also institutionalization of the program, we might need a foundation for everybody, all companies together. So for sure I would be one of the first investing if one day other coffee companies and traders and all stakeholders in the industry would decided to join this World Coffee Foundation.
Thank you.
Thank you. Thank you. Please continue.
Yeah, thank you. I'm a coffee exporter from Uganda. We do 7,000 to 8,000 tons per annum. Now we have the same problem from the Vietnam. When we fund for the farmers for the pre-financing, and when the commitment is not met from the farmers, we turn into huge losses. So as you are talking about the financial tools, is there any kind of insurance that we can get against the finance we give to the farmers? That is number one. And number two, we are talking about sustainability, and we are talking about certification, and we are encouraging the farmers for the rainforest certification. We are investing for their certification, training, and all those things. But when we come back into the market, we couldn't get the exact value what we are investing for the rainforest certification, organic certification, and all these kind of things. I don't know whether it is relevant to the bench now, but if you can assist us in getting a better markets for these certified coffees, is there any tool or any platform for that? Thank you.
Oscar, can you?
I guess the tool of the insurance that you're talking about, your first question, is definitely what I call the price insurance, which is a put. So what I was saying to the gentleman from Vietnam, it is make sure you know what the value, your ratio to loan value is that you're lending somebody in case of the market going down. Your biggest risk is somebody not having a right price to pay you back. So if the market goes down, you gotta ensure that you have value to maintain and be able to pay that person what you lend against. And the insurance of that is just a put. You buy it with a premium, like if you would buy the insurance to your car. Again, we could talk about it later, but it's as simple as that. It's like an insurance to your plant, to your factory. Is insurance against the worst thing happening. You don't want to take that insurance when the fire is in the block in front of you. You want to take that insurance when everything is peaceful. So the more you wait for that volatility to impact you, the more expensive it gets. So that's the insurance piece. The piece of the certifications, in the end, I think these certifications are trying, in general terms, some are better than others, are trying to ensure that us as producers do what we need to do in the farms, take care of the land. If you look at Rainforest Alliance, you know, not planting right on top of the river, making sure that the house has got the grease trap. And it is ensuring that we're doing the right thing, not only for ourselves as owners, is making sure that we're doing the right things for the people that are working on those lands and for future generations. That is what they're attempting to do. And I think they really get that message across. Now, when it comes to pricing, you end up coming back to supply and demand. And you end up coming back to quality. In general terms, again, most buyers are gonna put you against other sellers that may not have that structure of cost, but may have a better cup of coffee. So that entire specialty coffee world of points, you're trying to sell at 2, 3, 4 cents, 10 cents more expensive because you're doing the right thing. Unfortunately, in our space, and I think Dr. Ely says this very clearly, this is a situation that we all have to solve together. But a lot of times, that buyer, all being equal, goes to price. And I don't know how to change that mentality. I think he's got a better hold on that because I know how he runs his business, and I've seen him act. He's not talking, he's acting what he's doing out there. So you got to find the right partner. Sorry.
Yeah, the last question, please.
Good afternoon, everyone. Very insightful session. I actually have a question for Mr. Oscar, Ms. Jennifer, and Mr. Andrea. The first question is that in India, the equity markets are growing nominal GDP plus inflation close to 15 to 17%. And if this IV has to be set up in India, what sort of returns should an investor, let's say retail, should expect That is the first question. And the second is, if an FII has to put in money into India, we need very strong sustainability parameters that need to be showcased for the investors to get interested into India. So what sort of technological framework that needs to be put in place before we go ahead with this? Thank you.
Yeah.
Is that working? Yes, it is. All right. So your first question then about returns perspective. With respect to the vehicle that that I brought, my expectations would be impact investment expectations, right? And so in order to address the deep need for impact and development, and as you know, some of the parameters around that, personally, I think you're looking at single digits, right? I mean, you're looking at capital preservation plus something. And that the plus something is acceptable given the broad and the deep impact that you're trying to make in the vehicle, you know, in the vehicle. So when I speak with impact investors, what I typically hear is that they need their money back plus something. So the impact it's not going to be relative to what you would make in a private in the public markets by any form or fashion and stuff. So and then you would put in place high impact metrics and reporting and all of that as well too to go with it. So I think that it's, yeah, it really is, the impact investing is a separate basket of money than what would be kind of your traditional 100% commercial return. So
thank you. Yeah, last question.
Hello, I'm G.V. Krishna Rao, former chairman of Coffee Board of India. I don't have a question, I have a suggestion. In the context of creating a coffee fund with the private sector investment and during its implementation, expecting producer country government's participation in implementing the projects. In this context, I'll just share one example. During the coffee crisis in the first decade of this century, government in India waived off $50 million worth of loans granted to coffee growers, mostly small coffee growers. Now, whether it is a price volatility or climate effect, whatever may be the reason, when it is recognized the farmers were in distress, the government came forward to the farmers' rescue, though it is a little belated, but nevertheless, they gave them the relief. Now, if it is going to be a partnership between coffee fund and the governments, I would hope, as part of the design of the coffee fund, you will also provide for such contingencies wherein coffee fund also will take some part of the onus on this. Because this is the same rationale that was used while waiving of the loans. The government waived off part of it, banks waived off part of the loans, and farmers paid off 25% of the balance. Remaining 75% was waived off for the small farmers. Now, a similar mechanism, I hope you will build it into your calculations, and then you will hedge your risks against such a possibility elsewhere. Thank you.
Thank you for your suggestion, sir. Now we are officially closing this session. Before closing, I wish to thank Professor Rocco Machiavello, Mr. Emmanuel Santi, Mr. Andrea Ile, Mr. Askar Shabs, Ms. Jennifer Fast, and Dr. Mahesh for their valuable presentation. I also thank all the members present here for their patient hearing. Thank you one and all.
Thank you, sir. Before we leave all of you, I would request you to kindly stay back for a couple of moments. I would request Dr. Surya Prakash Rao, former Director of Research, Coffee Board, to kindly give him a mementos to all the panelists. Yeah, first of all, I would request Dr. P.G. Chengappa to kindly accept a memento from the organizers. I would request the panelists to kindly come forward so that it will be easy and then we can have it. If you can come forward, sir, it will be helpful. Yeah. Sorry for the trouble. The the photograph will come, okay, sir. Ladies and gentlemen, please put your hands together. There's one important announcement to make after the mementos are given away, so stay back for 5 minutes. Very, very important announcement. Thank you, sir. I would now request Professor Rocco Machiavello to kindly accept a memento from Dr. Surya Prakash Rao. Ladies and gentlemen, you are all keenly listening to the words of wisdom from all the panelists, so please do not forget to put your hands together and thank them. There's the only way all of us can do that. Thank you very much. I would now request Mr. Emanuele Santi to kindly come. Thank you very much, sir, for your presentation. The traditional way of saying thank you in our country. Thank you very much. I would now request Mr. Andrea Illy, the chairman of Illy Cafe, to kindly come. Thank you very much, Mr. Andrea. Thank you, sir. I would now request Mr. Oscar Shaps to kindly come over and accept the felicitation and the memento. Thank you, Mr. Oscar, for your presentation. Thank you, sir. I would now request Ms. Jennifer Foss to kindly come over and accept the felicitation and the memento. Thank you, Ms. Jennifer Foss. And finally, I would request Dr. K.S. Mahesh, the General Manager of NABARD, Bengaluru, to kindly come over and receive them. Thank you very much, Dr. K.S. Mahesh. Now, I would request all the panelists to kindly come forward and one photograph. Sir, Dr. Chingappa, sir. Dr. Chingappa. Here, sir. Here. Kindly come forward, sir. All of you kindly come forward for a picture. So as the picture is being taken, the announcement is that the day is not yet over. So after a hard day's work, and in spite of the Bengaluru Bandh, all of you have come here in large numbers supporting the organizers of the World Coffee Conference India 2023. So we have lined up a cultural extravaganza in the evening. The cultural extravaganza in the evening will start at 6:30 p.m. and more importantly, 325 students of Alva's Education Foundation, Mudabidri. Now, if you ask me, where is Mudabidri? Mudabidri is a wonderful place which is known for education by Alva's Education Foundation, close to Mangalore. And 325 students will come over here and present the unity in diversity and the different rich cultural heritage of our country where we all live in, which is India. And it is termed as Alva's Samskrutika Vaibhava. So all of you, after that, it will be followed by dinner. The cultural program will start at 6:30 sharp, and it will go on and followed by a grand gala dinner. I'm sure all the registered delegates and others would stay back and enjoy the evening and have a great evening. So thank you very much. Let's give a round of applause once again for all the panelists, and do join us back at the same hall at 6:25 so that the cultural extravaganza will unfold at 6:30. Thank you very much. Namaskara. All of you, please take care.